Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and these are the top stories that we're tracking at 1:30 p.m. this Wednesday afternoon. Stocks sway between gains and losses ahead of the Fed meet minutes release. Financials, utilities eke out gains, while FMCG and IT trade soft.
DCW gains on expansion plans will double its CPVC capacity and also plans to augment the capacity utilization of SIOP plant to 100%. The company will be investing 125 crore rupees for this expansion.
Time Technoplast gains after the company said the restructuring of the overseas business is progressing very well.
Tata Power and Adani Power in focus. Supreme Court dismisses Tata Power's appeal, upholds award of 7,000 crore rupee MERC contract to Adani Power.
And it's a subdued debut for Inox Green Energy, lists at a discount of 7.5% at 60 rupees versus an issue price of 65. The management tells CNBC-TV18 they aim to be a net debt zero company in a year's time.
All right, those are the top headlines that we are tracking on Midcap Radar. For the markets, they are quite steady, of course, off the highs of the days, the opening highs, that is. Nifty is up 26 points. We have the banking names which are doing well. So Bank Nifty is up around 0.5%. So that too has come off from the highs. The PSU banking space continues to do well. And it is the fertilizer space which is buzzing in house. So we have RCF, FACT, NFL, all of them up anywhere between 10 to 12%. So let's see what really is brewing in there. But for now, these stocks are really doing very well. But tomorrow, the expiry day, Reema, and that is something which will define market moves for the last hour today and tomorrow as well.
Absolutely. So today you've got the Fed meet minutes. Tomorrow you've got the India expiry and the US market shut. And generally volumes have thinned out in our markets. The FI gross volumes were nearly 40% lower in yesterday's trade. But so far, as you can see, very, very steady. We had a gap up opening. We slipped from the top in the first 30 minutes. And after that, things have been pretty flat. But let's get to our Midcap Movers segment. Vivek joins us as always, and he's going to take us through the midcaps that are moving around in trade. Vivek?
Well, good afternoon. Quite a few stocks on our radar today. First on our list is Aegis Logistics. Now, this particular stock has seen a stellar run-up and today is perched at a fresh 52-week high. Hoodco is another stock in the last couple of trading sessions on very strong volumes has moved higher. Today has managed to hit the 52-week high after quite a big gap. RHI Magnesita, now after the recent acquisition that the company has made, the stock saw a very strong up move on that session itself 3 days ago. And again today is up on strong volumes, up 12% at a fresh 52-week high. And VST Industries, too, this cigarette company, doing quite well for itself today, has come to a 52-week high. What we're looking at, again, PSU banks today have continued the up move, continued the rally. Bank of Baroda, Canara Bank and PNB, all three of them today managing to go higher in the session to a fresh 52-week high. On the other hand, some of the stocks that we are tracking today that are, facing quite a bit of selling pressure. S-Chand continues its fall today at a 52-week low. Star Health, Avanti Feeds, after a weak set of results, continues its downtick. And Indigo Paints, on the disruption today, has seen quite a bit of a selling pressure in the last couple of trading sessions. Again, this particular stock at a fresh 52-week low.
Okay, all right, Vivek, thank you so much. A lot of stocks which are in focus. Thank you for pointing them out. With that, we will now welcome Rahul Sharma, who is the market strategist, head of research and development, Equity 99 Advisors, for a technical check on the markets. Rahul, good afternoon. A lot of factors at play, as Reema was mentioning. The Fed minutes, there is the expiry tomorrow that we are expecting. US markets are shut. How to trade the Nifty in that case?
Yes, good afternoon, Sonal. See, definitely, as you were guys mentioning, that the volumes are like pretty down, and the participation has not been so much what we were witnessing earlier. But definitely, as we are witnessing since morning, that Nifty is been trading in a close range. So I think for Nifty, particularly 18,310 and 350 are the resistance zone. Unless we cross them, we will not be getting any further move on the upside. And similarly, on the downside, the range is small. 18,200 is the first support level, followed by 18,150. And for the Bank Nifty, Sonal, as we are quite cherishing this moment of new high for Bank Nifty, the breadth also is getting very much clear and good for the market. I think 42,550 and 42,400 are the support levels for the Bank Nifty, which should stay there. And I think bank should outperform again in coming days.
What about stocks? What would you recommend?
Yes, so Rima, like last week on Wednesday, in the same show, we were discussing about NBCC when it was trading around 37 odd levels. Right now, it is available at 41.30, and it has been showing like great moves today. So the people who are holding it shall continue the holding, and the people who are looking for the fresh position, I think NBCC, if you get decline at around 38 or 39 levels, those will be the very good levels to enter into NBCC. The target price for NBCC are set at 45 and 48, keeping stop loss at rupees 37 in NBCC. The second selection of stock is Apollo Hospital. The charts of Apollo Hospitals are showing us a great move, and it was consolidating in a range. I think it is going to break in coming days. So Apollo Hospital is my selection with the target price of rupees 4700, keeping stop loss at 4440.
All right, Rahul, thank you so much for joining us, taking us through your technical outlook on the markets. And with that, we'll slip into a short break. Up next, we'll be joined by V. Venkatramani, who is the CFO at Green Panel Industries, to discuss their business outlook. Stay tuned. Welcome back. Well, Greenpal Industries posted a muted set of Q2 numbers. Company witnessed margin dip in plywood business. To discuss more on company's business outlook going forward, how is the demand looking, we are joined by V. Venkatramani, who is the CFO at the company. Mr. Venkatramani, good afternoon. Always a pleasure speaking with you. Well, in Q2, you did mention that MDF volumes showed decent growth in domestic markets. However, export markets have slowed down. Is that a situation which has continued in Q3 as well? And in the near term, do you expect this to continue?
Okay, domestic demand continues to be good, although it was partially impacted during the festival season in October and also the first 10 days of November. And we are hoping that it will pick up soon, and we should be back to the numbers we achieved in the earlier quarter. So as far as exports are concerned, exports volumes are improving. We have been successful in getting fresh orders from new customers. But yes, we are facing some pressures as far as export realizations are concerned. So I expect that export realizations will be lower as compared to Q2.
Afternoon, and thanks for joining in. So I'm reading out, I'm reading out a note from Jefferies, which is broadly about the home building industry. They're not talking about your company, so let me clarify that at the outset. But they're saying that many channel partners are indicating weaker construction demand presently, though they're hopeful of a revival in Q4. And Delhi's pollution control has impacted real estate there. Is this something which you are seeing on the ground?
Not really. I think, yes, normally Q3 is a weak quarter because of the festival season. People generally prefer to do their homes, their furniture before the festival season starts. And then there's a bit of lull, and then demand starts to pick up from around the middle of November once the festivities are over. But there could be some impact. The RBI continues to increase interest rates. We expect that there could be some short-term impact, but considering that the number of residences just have been sold during the first 6 months, we are looking ahead to robust growth, in the succeeding quarters.
So, Mr. Venkatramani, you mentioned that export realizations, they will decline on a quarter-on-quarter basis. So what does that mean for margins overall? Will you still stick to your 26 to 27% margin guidance that you had given? And since demand, domestic demand, it has picked up, so has the export demand. What does it do to your volume guidance?
Okay, as far as the margins are concerned, I don't expect any significant impact on the margins because exports are just about 15 to 20% of the total volumes. And we will have some savings in this quarter on the raw material front, especially on the chemical resin side. So I don't expect any significant impact on the margins. So margin guidance continues to be strong for the next 4 to 6 quarters. We don't see any major headwinds that way. In fact, even if we see some impact on realizations next year once new capacities come up, the volumes that we are targeting should more than enable us to maintain the margins or maybe slightly improve on that. And recently, we have also launched a new product, which is a fire retardant MDF. And we expect that this will enable us to improve on our market share.
So your volume guidance of 12 to 18% for FY23 stays? You're reiterating that?
No, not really. That was the guidance we had given at the end of the last financial year.
Okay.
But post-Q, we had revised it down to 12%.
Okay. So FY23 volume guidance is at 12%. And margins will be maintained in this band of 26 to 27%, right? You said...
No, actually, what I said was that for the next few quarters, we expect margins to be around the 30%.
30%.
For the MDF segment. At the consolidated level, it could possibly be around the levels you mentioned, including the plywood business. But for the MDF, we expect margins to be around the 30% level for the next few quarters.
Got it.
Okay, so you're talking about newer expansion, newer capacities which are coming up in FY24. What would the initial capacity utilization look like? And both in your MDF and plywood, what is the current capacity utilization? Similar to Q2 levels?
On the MDF front, we would currently be at around 80%, 85% capacity utilizations. And that's the number I expect for the current year because we increased capacity by about 20% last year. So I think, yes, we'll be fully utilized as far as the old capacity was concerned. But as far as the new capacity is concerned, I think that will probably be utilized in the next financial year. And the expansion that we are planning will be commencing production in the first quarter of FY25.
Okay. And for this capacity expansion in the first quarter of FY25, will you be looking to take on some debt or are you open to the idea of raising equity?
So a major part of the expansion will be financed by internal accruals and we will be taking some debt. So I think probably about 65% internal accruals and 35% debt. But once the expansion is completed over the next 2 years, we should be back to net debt-free status.
No fresh equity fundraise plans?
No, not at all.
Okay, Mr. Venkatramani, last question before we let you go. Your superior product mix is around 12%. Do you plan to increase that and will that be margin accretive? Of course, it says superior product mix. So what does this pie look like?
Okay, that 12% is not for the MDF segment. That's actually for the plywood segment.
Okay.
On the MDF front, our value-added products are almost 50% of the total volumes.
All right, got it. Thank you, Mr. Venkatramani, for joining us, taking us through what the outlook is looking like and what the industry situation also is right now. That's the word coming in from Green Panel Industries. But with that, we'll do one thing. We'll take your leave on this edition of Midcap Radar. Do stay tuned. We will get you more on the other side. But before that, a quick programming note. To fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective, presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, November 25th, in the presence of Shireen Bhan, Managing Editor, CNBC-TV18, Mr. Hitendra Dave of HSBC and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces. Don't forget to tune into CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Market has picked up some pace, slight recovery from the lows. But in the broader markets, we have a lot of stocks which are moving around. And in our spotlight segment, we have DCW, which is in focus. It's buzzing on the back of some capex that the company has announced. The first thing that they have spoken about is doubling its CPVC capacity. They are going to be adding another 10,000 tons in terms of capacity. CPVC project, it is expected to be commissioned in second half of FY24. They also plan to augment the capacity utilization of its SIOP plant, which is basically synthetic iron oxide pigments, and this debottlenecking will be completed by Q1 of FY24. So these two separate updates is what the company is or the stock is buzzing on. DCW is going to be investing 125 crore rupees on both of these two projects, and company anticipates higher projects coming in from here because both these projects or both these products are higher margin products for the company. Just to give you a perspective and a sense of what the company does, it is a specialty chemical manufacturer. They manufacture products like caustic soda, liquid chlorine, hydrochloric acid, PVC resin, ferric chloride. So these are commodity chemicals where the company is trying to get into the specialty chemicals chain, and that's the reason why it is entering into this big capex, and they are expecting margins to improve because of these products. The stock higher by 1.5%. The other stock which is in focus is Inox Green Energy. It made a subdued debut on Dalal Street today. The stock listed at a discount of 7.5% at 60 rupees per share versus an issue price of 65 rupees per share. Earlier today, we were joined by Devansh Jain, who is the executive director at Inox GFL Group, to discuss the company's debt reduction strategy. Listen into what he had to say.
We've got about 790 crores of debt as of 31st March 2022. 370 is going to get repaid by the primary proceeds of the IPO. What that would leave us with is approximately 420. Over the course of the year, we've sold 4 SPVs, 3 to Adani and 1 to Torrent. We've recovered majority of the 100 odd crores which was to be recovered there. What is left for us to now action out is sale of the last SPV, which would be downsold in the near future for about 300 odd crores. So broadly, what we're aiming for is to make this company a net debt-free entity in the very near future. Look, I'll talk about wind first and then I'll come to green. So, I think we're seeing the sector coming back very, very strongly after almost 4.5 years of a very painful transition from feed-in tariffs to auctions. We are very, very bullish. I think all the 3 segments of the market, which is IPPs, public sector enterprises, and the retail captive third-party market, I think all of them are firing on all cylinders. The larger goal obviously is 500 gigawatts by 2030, of which wind is 175 gigawatts. And we're presently at 42 gigs. So we're really talking of 4xing the sector or 16 gigawatts per annum. Now, whether we achieve 40% of that target or 70% of that target, the sheer numbers are massive. And I think what's also happened is after the whole painful transition, there's been significant consolidation in the OEM segment. At Inox Green, we're looking at significant inorganic growth opportunities.
Okay, that's Inox Green. The stock down 8.5% as we speak. Well, for the markets, we have the banking names which are doing really well. Nifty is up 40 points, slightly higher than the levels we saw earlier. But we have the likes of SBI. That stock is at the day's high, and that is something which is pushing the bank Nifty higher as well. ICICI Bank is the other one which has also moved to the high point of the day. So that stock is up around 0.5%. In the broader markets, we have a lot of stocks which are on upper circuit. So there's Fino Payments Bank. The stock has seen gains of 20%. It is logged in upper circuit today. This week itself, the stock is up around 24%. So that's stock in focus. We have RHI Magnesita. They had made an acquisition yesterday. So that stock is up around 12.5%. And as I mentioned at the start, the fertilizer names, they continue to do well. So we have something like an RCF, FACT, NFL, all of them up anywhere between 5.5 to 12%. So a lot of buying seen in the fertilizer space. And with that, it's curtains down on this edition of Midcap Radar. Do stay tuned. Your stocks when we return.